Session. I'm Ben from the Coincall team, and I'm going to be hosting today's session. It's a pleasure to have you all here. Before we start, let's just clarify that the information contained herein is provided for informational purposes only and does not constitute an investment recommendation, invitation, offer, solicitation, or obligation to carry out any operation or transaction. Okay, so today we will go through the intro for Coincall and with SpreadGreg, and then we will be discussing about the significance of the derivative markets, basic options information, things to avoid, the Coincall's platform and features, and end with a Q&A. Before we dive into the topic for today, let me briefly introduce to you guys about Coincall. Okay, so Coincall is a leading professional options and futures trading platform founded by a team of experienced traders from renowned exchanges and market makers, including Binance, JP Morgan, Optiva, and UBS. Inspired by user-friendly platforms like Robinhood, Coincall team have meticulously designed a user-centric platform that simplifies crypto options and futures trading for all users with different backgrounds. So we offer a light and a pro version for both beginners and seasoned professionals. It features USD denominated options trading, which is very uncommon in this industry. Additionally, we provide efficient and high performance trading stack with a full API, prioritizing user asset security through third-party regulated services. At Coincall, we also believe that true wealth goes beyond monetary rewards, and we are dedicated to supporting our users in their journey towards growth and prosperity. Our goal is not only to help you achieve financial gains, but also to expand your knowledge and your understanding. That's why we came up with this, the Coincall's Masterclass live session. This live session will be composed of a series of tutor-led live events designed specifically to enhance the trading knowledge for all of our valued users. We've carefully curated a lineup of renowned traders and educators from the industry to share their knowledge and experience on options trading. We are also hosting a series of Learn to Earn events, where you can not only learn how to trade like a pro, but also earn rewards in the process. So feel free to visit the Coincall official website anytime and learn more about everything we've just discussed. So now, without further ado, please join me in welcoming our esteemed speaker for today, Mr. Gregory Placenta, who will be sharing his insights and strategies to help you navigate the world of crypto options with his extensive experience and expertise in trading. He will guide us through the pitfalls to avoid as you embark on your crypto options trading journey. Thank you all for joining us today, and let me remind you to stay engaged throughout the session, since we'll be selecting 10 participants here to receive 0.2 ETH options position as a participation reward. Also, please feel free to connect with us on Twitter, Telegram, or Discord and engage with our community to share your thoughts and feedback on our live sessions. Together, let's make this learning experience remarkable. The stage is yours, Greg.
Hi, how are you? Thank you for the invitation. I'm glad to be here, and I'm glad to be at the beginning of this, in my opinion, very interesting thing. It's the crypto options. I trade options since 1999. It's a long time. The market's changed a lot. And in my opinion, the option market is one of the most interesting market because you can adapt it to your way to trade. Okay, a little bit about me. I'm Hungarian. I'm Gregory Placenta. I'm from Hungary, from near Budapest. I specialize in spread trading. This is my name. Is also SpreadGreg. Everybody knows me in internet as SpreadGreg. I trade always spreads and with options and with futures. This is why I think there is an edge doing different kind of strategy with futures and with spreads. This is my first presentation in English. Why? Because I lived a lot of time in Spain. I spent more than 15 years in Spain, and now I moved back to Hungary. Okay, I'm a CTA, a commodity trade advisor in the United States. I work with family offices, and I also coach because I like teaching. I like finding edge in the market. mostly with options and with futures. And we have a group of traders, and we would like to share and to work together to find more and more possibilities to beat the market. Why? Because the market is difficult, and you have to find a little bit of edge in order to be able to make money on the long run. I know that the crypto market changed in the last few years. I'm trading more the normal market, but in my opinion, the crypto option market will be the next big wave in all kinds of investment. Why? Because may I present? Because I need 2 slides. No, let me share screen, and let me share this screen, and I can present. Now you see my okay, and I need one more thing. Okay, so here is a very, very interesting chart. Maybe you see it before, okay? But this is the change in the option volume in the normal market. The normal market, I mean SPX, equities, United States market, okay? And as you can see in the last, let me say, 20 years, it changed dramatically. But if you look the numbers here, we can see that in the last 2 years or 3 years, the volume of options or derivative trading, let's call it derivatives trading, rise a lot. Why? Because everybody and the internet and the platforms and the market, it's giving more and more access to people to this kind of products. And if you are trading stocks or indexes, you have to be aware, you have to know that now the market structure changed a lot because of the derivative of the option market. And in my opinion, if you invest or if you do all kind of strategies, you have to know that there is a market, there is something out there, there is some power that is moving the market. And this is the derivative market. As you can see, GameStop, Tesla, Nvidia, they never ever had such as a big move as in the last few months, on the last few years. And you're asking why? Why is rising so much? Why is so aggressive Nvidia's results, or Nvidia is rising a lot? It's because of the option market. Everybody is moving, and we saw it in the last 6 to 7 months, that everybody is moving and is trading more and more options. Talking with big market makers in this segment, they told that actually quite 30 or 35% of the volume traded, it's because of the derivative market. What does it mean? When we are trading a derivative market, an option market, the underlying, which I will explain in the future, is also affected. And this is why, in my opinion, it's very important for every trader who is in Bitcoin or in stocks to know that there is something there which was not so important in the last years, but it's very important now. Why? Because it's moving the market. And this also gives a lot of opportunities for traders like you to see the increase and the change in the market structure, and all because of the options. Here we have a chart of Bitcoin and the Bitcoin option market, and we can see that there is volume, Okay, people are starting to trade, but it's just 2% of the actual notional volume of the cryptos. What does it mean? That we are very at the beginning of the option market for this particular cryptos, Bitcoin and Ethereum, and you can see that in the equity market, 40% of the trading volume in 2011 was options. So we have a lot of room. We have a lot of possibilities. We have a lot of to learn and to understand. And this is why we are here. Why? Because option trading, it's not, I will talk about this a little bit later, but option trading, there is a very big mysticize. They are talking about a lot of second derivatives, first derivatives, and in my opinion, the option market is not simple, but it's not as complex as the people think. Okay, and after 20 years of trading derivative and options, calls, and put in different markets, I mostly trade commodities, corn and wheat, and also index option and zero DT options. But in my opinion, it's like making it very difficult, and they are talking about special words. And for a new trader, it's like it's a lot of information. But my goal here is to teach you bit by bit the different parts of this market, and I will try to show you why this market is so wonderful and gives a lot of opportunities. Okay, and remember, you are at the beginning. Why? Because this market, it's not a moderate market. We are at the beginning. What does it mean that we are at the beginning? You remember when Bitcoin was trading at $3-4? Okay, and now with all of this, we are going to have new opportunities and the new way to make money and to trade this market. Okay, another very, very important thing in this, one of the most important idea or most important part of the market is the zero DTE market. Maybe you already know or heard about this zero DTE. That means that 0 days to expiration. Okay, that means that these are options. These are derivative contracts which end at the end of the day. And as you can see in the SPX in the equity markets, in the last 4 quarters, this kind of options, it's the 50% of the market. And remember, in crypto options, we have expiration always every day. Okay, for the next 7 days, we have expiration every day. Why is so important? Why do you think that it's so important to have expiration, a very short-term expiration? Because if you have a good strategy, and in option you can make strategies with a very good win ratio, if you have the possibility to repeat the strategy every day, this gives you mathematically a very high possibility to make money in the long run. And what we see, that even the normal market, the traditional market, the old market, changed in the last few months to the very short-term option expirations. Why? Because there is an edge, and we have it in the option market. And remember, just 2%. We are going to have more and more people involved in this business. More and more people want to trade. And if you are at the beginning, your possibility to make money, it's bigger than if you go to the SPX. Okay, the SPX is the biggest option market. These are options for the S&P 500 index. Okay, the SPX market is the most crowded trade. Everybody is trading and everybody is trying to make money in the same place, and it's full of hedge funds, full of professional traders, full of banks, and they want to make the same money, and it's very difficult. The edge there, it's very, very low, and you have an edge. Imagine in a different market. Imagine in the new market, the possibilities are bigger, but you have to learn, you have to understand basic concepts, because options is a little bit different, like futures, or like buying cryptos directly. But my work is to try to explain it to you and to try to explain where you can find an edge. Okay, and what I told about the XPX, it's a very simple example, and if you want to everybody is crowded and everybody wants to make money in the same place. Okay, that means that it's very, very, very difficult to do it. It's always when I talk in my group, I always tell that imagine a pub, and there is just two girls, and there are 200 guys who wants to talk with these girls. The possibility, it's very low. Why? Because everybody wants to do the same thing. And this is very illustrative to say, okay, I'm not the richest and I'm not the most beautiful one, so my possibilities to make something, it's impossible. It's the same thing in the XPX. It's the same thing in traditional markets. The possibilities to make money there, the edge, it's already capped. So the crypto derivative markets, the crypto option markets, in my opinion, will be the next boom of the next years. And I'm here to try to explain you minimal things. Okay, why minimal things? Because it's the first lesson. In the first lesson, I don't want to. So my idea is to show you basic things. I'm sorry if you know about options. I'm sorry if you are expert in options. This is the first lesson, and we are going to go bit by bit. Why? Because it's how we can build a basic knowledge to trade this market. Okay, I will make an effort, and I'm making an effort to talk without using technical language. Okay, why? Because it's what I see in every presentation. They are talking about gamma, about deltas, about second derivative, about vannas, about a lot of information, which in my opinion at the beginning you don't need to know it. You are going to learn about it, and if you are going to make simple strategies, you don't need to know all this information. Okay, and if you know about options, hope you will find it interesting what we are going to talk today, because I try to show you today basic things you have to avoid when you start trading options. Okay, it's my personal experience. I'm trading options for a long time, and all you see here, it's a mix, and it's a compressed knowledge of mine, which I'm going to show it to you. Okay, it's impossible to teach you to trade options in 45 minutes. I learn every day about this market, so you have to be open-minded, and you have to want to understand the different part of the derivative trading. Okay, I hope you will enjoy it. It will be a long run. It will be we are going to be together for more time and to learn. Let's see. Okay, what is an option? Because option, derivative, option. What is an option? Okay, before we start to determine what is an option, let's have an idea what is this expression of option. Okay, imagine that you get a new job in a new city, far away from your home. Okay, but you don't know if you like this job. Okay, but you need a flat there. Okay, you don't know if the company will renew your contract. You don't know if the place is good. You don't know. So buying a flat just because you move to a new city, it's quite a stupid investment. Okay, but you can decide to rent a flat and to say to the owner that, look, I will be here and maybe 6 months or 1 month, 1 week, or the time you want. And if I would like to buy your flat. If I will get the job, if I will stay here, and if I'm here, I would like to get this job, this flat. What you do? You give, or you buy, or you agree with the owner of the property a contract to buy the property in the future. Okay? And you get, this is an option. This is the simplest way to explain what option is. You say, I would like to buy it, but not now, in the future. You agree a price, you agree a time, and you agree about when to close the deal. And it's why it's important for you, because you pay just a premium to get a right to buy a flat. Imagine you don't get the job. You lost what you paid for the contract, and you can move back, but you don't buy the property. You don't have to sell it. You don't have the problems with the property. This is a very simple way to explain how an option works. And this is very interesting because in this example, you can, it's a normal example, a normal market without talking about cryptos, or without talking about different special words. It's you pay something to get it in the future if you want, at a price established now. And the most important thing is, if you don't want to get it, you leave it. This is a call option, basically. Okay? When you're talking about a corn producer, if he wants to lock his profit for the year, he can do it with options. Why? Because he is a corn producer. He makes corn. It's a farmer. He can buy an option. Okay? It's called put option. And he will agree in the future at what price he is going to sell the corn. Okay? So basically, what is this option contract? What is this? What we are talking about? So basically, an option, it's an agreement that allows you to buy a pre-established amount of Bitcoin for a particular price called strike price in the future. And the opposite, so to sell the Bitcoin in the future, it's called put. This is the only two things I would like to learn today. The call gives you the possibility to buy something. So if you think that the Bitcoin is going up, it's called call. And if you think that the market is going down, or the market will fall, it's called put. And this is the basic thing you have to know about options. One gives you the right to buy, and the other one gives you the right to sell something. If the market goes up, you are going to make money if you buy the call, and if the market goes down, you are going to make money with the put. Okay? Then we are going to see in a few minutes, we are going to see a chart of the payout diagram of these two kind of contracts. Because finally, an option is just a contract. Okay? Yes, put is like when you want to short a contract, and call it's when you want to be long a future contract. But the most important thing about options, okay, is that they are not linear. Okay, what does it mean that not linear? What Marcello is telling: if you buy a future, or if you buy Bitcoins, or if you buy the underlying, okay? If the market goes up 1%, you make 1%. And if the market goes down 1%, you lose 1%. We call it linearly, okay? 1-to-1. But the derivatives, calls and the puts, the options, are not linear. What does it mean? That if the market goes up 1%, you can make 10 or more than 10. It's not linear, okay? As you can see in this chart here, this is a linear regression, okay? That means that if you are buying and the market goes up, you win what the market goes up. And if the market goes down, you lose money, okay? But it's 1-to-1. The ratio, it's 1-to-1, okay? In options, this ratio is changing. And this is one of the beautifulest part. This is one of the most important part of the options, is that it's not linear. Why? Because you can buy a call very out of the money, and you can make 200-300 profits. Why? Because of no linearity. Unfortunately, this not linearity gives you the obligation to learn a little bit about the option market. Why? Because when we are talking about the market is not linear, there is something out there you have to know, and this is like why it's not linear. And I will explain you in the next one of two slides that unfortunately this makes this no linearity of the option market makes it a little bit more difficult to understand, at least at the beginning, okay? But it's very important to understand. Why? Because you say, I want to buy Bitcoin, okay, I buy the future, I buy a portion of the Bitcoin, and if it go up 10%, I make 10%, okay? In option market, this is not true. In option derivative market, this is not true. And you have to understand it. We are going to spend more time talking about how you calculate it, but it's not important for you. Why? Because you are not a big hedge fund who will have to check every time the positions they have. No, for you it's simple, and we have a good thing in the platform, and we are adding to the platform more and more things to get this to see directly the P&L of your position. We are going to see it at the end of the presentation, okay? But what you should understand, no linear. It's not 1-to-1, okay? It's different. We don't know how much is now because it depends on every option. Okay, what is the benefit of the option market? You say, okay, why option market? At the first, if you look to the history of the option market, everybody will tell you that the first options was in the wheat pit in Chicago a lot of time ago, and it was for insurance, to protect. Why? Because using options and using calls and using put, you can speculate, of course. We have it here because most of you want to speculate with options, want to benefit from price change, and want to benefit for price change, not linear. Okay, what does it mean? That if the price rises a lot, you want to make more than 1-to-1. The options give you this possibility, but also gives you the possibility, if you have Bitcoins, you can limit the loss of your portfolio. Okay, it's like a house insurance. You can make insurance on your Bitcoin portfolio, on your crypto portfolio, and this is very, very important. Why? Because with option you can do it. Also with option you can hedge. Okay, if you can hedge if you are a farm. Okay, you are a Bitcoin farm or crypto farm. Okay, you can use this option to hedge your production, to hedge your portfolio, and to hedge what you are going to make in the future. Okay, and also one of the best part is that you can make a very good capital diversification. Why? Because buying options is like when we're talking about the house. Okay, you don't need to buy the house to have the right over the house. What I mean that with the owner, okay, the house, you say, okay, I buy a call, I buy a contract that over that house, but I don't pay it. But I have the right over that house. That gives you a very good possibility to make a diversification. Why? Because you can buy a house in one city, you can buy a house in another city, and to make different in different cities to don't have the risk of the city. And you can do it with options without having to pay all the house, all the price of the house. Of course, this is leverage, and you have to be very, very, very careful how you deal with this leverage. Okay, but it's very good because if you know how to make a good portfolio with options, you can do it without putting down all the money. Okay, and to understand the options and to understand the option basics, okay, we have to know a few words, okay, and first is the underline, okay. Who is the underline? Because we are talking, when we are talking about derivative markets, we always have somebody who depends on. This is called underline, okay. If you are talking about corn, the corn option, the underline of the corn option is corn. If you are talking about Bitcoin, the underline is Bitcoin. If you are talking about XPX options, the underline is XPX, okay. At the end, all the option and option market has exercise price, which is the price where agree that the deal will be made in the future, okay. We have an expiration date, it's a time, is the end date when the contract is terminated and should be executed, okay. And then we have the premium, or how much you pay for that contract. Boom, how it looks. When we are talking about options, and in our platform, you have Bitcoin is the underline, okay. The exercise price in this case is 30,000, okay. The type, it's call. It's an option when you buy it, when you think that the market will rise, and we have put, okay. But this is a call. The expiration date is 14th of July, okay. And the premium, we don't have the premium because the premium changed, okay. But the premium is the dollar. We are going to see it in the platform. It's how much money you pay. But when you are talking about options, this is very important to know that this is how normally when we trade options, we talk about what you are saying, okay. Bitcoin, the date, the price, okay, and the type of the option. Why it's important? Because every option it's different, and every option has a different multiplier, and every option has different it's moving differently depending on where the option is, okay. But let's see. We talk about the linearity, okay. We are going to see the platform, and in the platform I'm going to show you exactly how this is set up, okay. Before we go further, and after knowing what is a call, what is a put, if you think that the market goes up and you have to buy a call, if you think the market goes down, you have to buy a put, I want to tell you what not to do, okay. Why it's important what not to do? Because the options are not linear. The price of the premium you pay for that option will depend, because it's not linear, will depend not just of the underlying, not just if the Bitcoin rise or the Bitcoins don't rise, this non-linearity gives the options a lot of possibility to make a lot of money with a different ratio, okay? And also makes it a little bit different computation. And so what is for me the most important thing to show you? If, and I promise you that I won't use special things, okay? Special expressions. If you want to buy a call, the most important things you should be careful. It's about this indicator. Okay, we are going to put every day this indicator in telegrams. We are going to talk about it, but it's very important because it's very easy and very simple to understand. Okay, this is a chart. Okay, I'm going to explain it. Okay, this is time. Okay, let me pick another color. Okay, we have it September, November, January, March, May, July. Okay, and we have a price between 0 and 150. Okay, everybody knows about this is the lowest. Okay, and this is the highest price. Okay, what we can see very quickly in this image that this indicator. Okay, I don't want to say the name of this. Okay, it moves between different ranges. Okay, what we can say at the beginning that normally it's not above 80, and we just see a few occasions when this indicator is below 25. Okay, the most important thing about this indicator is that you have to avoid to buy options when it's high. Why? Because everything I told you about the call option, if you buy a call option when this indicator is high, probably 99% you are going to lose money. Okay? Is the structure of the option. Why is so important? Because you will see that you buy something, the price goes up, and you lost money. And it's very simple to determine when I have to avoid to buy options. When this indicator, which is volatility, okay, you can see here, it's high. And you have to buy options when this indicator is low. Because with this very simple visualization, you can make, or you can have a very big edge in the option market. Why? Because if not, you are going to lose money. And you are going to lose money not because you are not right in the direction of your trade, because you are not right in volatility. Why I'm showing you this? Because you won't understand it at the beginning. But this is not trick. This is not very high level information. As you can see, it's just a range. And you have to say, before you decide to buy a call or to buy a put, okay, you have to decide, let me check this indicator, the volatility in this case, okay, what Greg told me, if it's low or if it's high. Why? Because this will determine 90% of the edge of your trade. I saw a lot of people buying with high volatility and they lost money, and they called me, hey Greg, I bought it and it goes up and I lost money. So when you trade option, I know that it sounds very crazy, but when you trade option and you think that the bid go up, you need to buy a call. it's what I told you before, no? But it's not always true. You have to check, okay? You have to check the volatility and you have to check this indicator. Why? Because it what finally will determine you if you are going to make money or not. Here we have a payoff diagram of a call option. And before going in to see the platform, it's very important to understand what is a call. You say, how can I make money in this market? If you think that the market goes up and you check the volatility is not high, the basic idea is to buy a call, okay? What you do when you buy a call, basically you pay a money, okay, which is how much you pay for the contract. This is your max loss. Why? Because imagine that you buy a call and you pay $100, okay? How much you can lose on all of the trade? It's $100. Why? Because you make a contract. And remember what I told you, it's a contract. And you agree, you pay that maybe in the future you are going to execute that contract. The good thing about option is that in the future, if you don't want to execute it, you are not obligated to take the trade because you are a long call. What does it mean? That your loss is known. You know that the maximum you can lose is the premium you paid for that contract, the premium you paid for the option, and you have unlimited profits. This is one of the best thing. And I think there was a question before, okay? Future and option, which has the higher risk? In my opinion, so when you are buying a future, this chart, it's like this, okay? So if the market goes up, you can make unlimited profit. And if the market goes down, you can have unlimited loss. When you are doing options, in this case, okay? So this is the future. This is this is a both future. Okay, it's like this, and this is a call. Which is the difference? You can see very quickly. The maximum you can lose when you trade a long call option, it's the money you pay. When you are a long future, you are going to lose until zero. Of course, trading option, it's safer than trading futures. Why? Because the maximum you can lose is the amount you pay. And this gives you, so you pay a fixed amount, and this gives you the possibility to make unlimited profit. In the futures, if you are not stopped out, you are going to lose every day. If the market goes down, you lose. In the options, no, because you have a cap. The cap is what the money you pay. Okay. The same you have in the when you are talking about put options. Okay. We are going to see in the future because I didn't put it here. Okay. But what I told you, that buying a call if you think that the market goes up is the way to benefit for the market, no? But I told you that if the volatility of this indicator is high, probably you are not going to make money. Why? Because of the tricky or the interesting thing of the options. Okay, so you say, okay, but how can I make money? Is this indicator it's high, but I think that the Bitcoin can goes up. Combining two kinds of options. In this case, you buy one call and you sell another call. Look at the difference and the probabilities you have. When you have a future, remember that when you have a future, the payout diagram is like that. If the market goes up, you make money. If the market goes down, you lose money, and you look and you don't have limits. Okay, but when the volatility is high and this indicator is high, combining two kind of option contracts, in this it's a long call and a short call, you can benefit from the market if it's go up, and you don't have the risk if the volatility it's not with you. We will see a lot of special examples with this. Why? Because in my opinion, is the way how you can think about the market. Why? Because you say, I want to buy, but the volatility is high. You have possibilities. I want to sell if the volatility is high. You have possibilities. The option market gives you a lot of combination of trades in different scenarios. Why? Because now you just know one thing. If you buy and the market go up, and you make money. And if the market goes down, you lose money. With options, you can make money when the market is not going up, it's not going down. When the market is going up, when the market is going up just a little bit, you have a lot of combination. And this is one of the best things of the market and of the option market or the derivative market. Another very important thing of the derivative market is that you can adapt all strategies to your portfolio. Why? Because if you don't have enough money, with combination of the options, or with options, buying a call options, you can get the right of the Bitcoin future, of the Bitcoin underlying. And this is very important. And remember, all the professionals are trading combination of the contract. This is a statistics I get for an option exchange, okay? And you can see that because of the special market condition, most of the people do combination of calls and puts. And these are all strategies we are going to learn, and this is how the market is structured today. Multi-leg means that people not just bought a call, they bought a call, sell a call, or they bought a put, okay, and sell a put, or they bought a call and sell a put, okay? They are making combination. Why they are making combination? Because for now, you just make money if the market goes up or down, okay? But because of the possibility of combination of the options, you can make money in quite each of the scenarios. And this is the edge, this is the difference, and this is the professionality of the option market. And this is what I would like to teach you in the next few months. Because as I know, we all want to make money and we all want to make a lot of money, but you have to avoid losing money, because the most important thing is to be in the market. Because if you just make bets and the bets don't have an edge, don't have a possibility to make money, you are going to run out of money. With the options, you can manage your portfolio, you can do different strategies, and you can be in the market enough time to get the possibilities, to get the possibility to make money. Remember that there is a very interesting thing. It's the 90% of the people lose 90% of their portfolio in 90 days. This is the 90 rule of trading. With options, I can tell you that this is not true. Why? Because of the possibility of the combinations you have. And this is what we are going to learn. Of course, in 45 minutes, it's impossible to explain. Another very, 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 very important thing in the option market, maybe you heard about it, it's so one of the most important is not buying options when this indicator is high. And the other very, very, very important thing is not sell options. Why? because selling options, selling Bitcoin options, doesn't matter if they are calls or puts. Okay, they are rights to buy Bitcoins or they are rights to sell Bitcoins. Okay, call and put. When you are selling options, you are risking a lot of money to make sense. In option trading, we call it picking up cents in front of the steamroller. What does it mean? That you are going to send options, you are going to sell options, and you sell options, you sell options, you sell options, you sell options. Maybe you are making money during 8 months, 9 months, 10 months, 1 year, 2 years, but at the end, you will lose it maybe in 1 day or in 1 trade. So after telling you that please don't buy options when the volatility is high, at the same time, I tell you that please don't sell naked options, never. We have some special cases, but it's not for beginners. Why? Because you are going to lose everything. Selling options, it's totally the opposite what we see with the when you buy a call and you buy a put. Okay, selling options, you can make a fixed amount of money, okay, and you can lose without limit, unlimited lose. So you told me what I have to do in order to make money in the crypto options. I will tell you, not buying expensive options or not buying options when the volatility is high. And I can tell you that please don't sell options, naked options, options without protection. Why? Because you have unlimited loss. Everybody it's telling it's no, because it's the edge of making money to sell option is very high. Yes, maybe the probability to make money it's very high, but because of the unlimited loss, you have very, very low chance to make money on the long run. I lost. It's my experience. I lost a lot of money selling options because when the market goes ugly, you can lose a lot of money because you are not capped. So conclusions. I'm sorry. This is my first time I make a presentation in English. I'm avoiding using a very special language because it's your first time and I don't want to scare you about this market, because this market it's fabulous. This market it's very very interesting and can help you to make a lot of money, but you have to learn a little bit. Okay? Because the nonlinearity of the market, okay, because the nonlinearity of the market, because the nonlinearity of the market, the options are quite difficult. I'm sorry, but one of my algo executed on order. The option price don't move like the future, because it's not linear. This is why you have to understand, I have to learn a little bit more than when you're trading futures. Okay, because trading future it's like a bet. You bet that the market goes up or bet if the market goes down. Trading option is not a bet. Trading option is finding an edge. Okay, we will learn, of course, a lot about basic option strategies and basic options in the future, and how is the best way to benefit if you want to be long or if you want to be short. I don't know the future. The decision to be long or to be short, it's your decision, okay? But I can help you to determine which is the best or which is the easiest strategy or which is the best strategy to make more money with your market condition or with your market analyze, okay? Let's see now the platform, okay? Because I want to show you a little bit where we are with the when we are now with that platform. Okay, let's say it's here. You can see. So if you enter in Coincall, of course you can trade futures, which what we are doing right now. Okay, and now we add this new button, which is trading options. Okay, here you can choose between a simple version of the platform and the pro version. Okay, let's start with the simple, because of course not everybody knows about options. So what we have here we have it's we are in option trading. Okay, we are in light version, in a basic version. Okay, and what we have here, we have the possibility to buy, call options or put options. Okay, if you want to go long, it's call, and if you want to go short, it's put. Okay, this is long and this is short. Okay, what we have here, we have the expiration date for when you want to buy this contract. You can buy it for today, it's 2025, or for tomorrow. Okay, because today's option already expired. Here you can choose tomorrow, 26, 27, 28, 4 of August. Okay, 11. And here you have the price. Okay, the funniest thing is that if you don't know what you are going to do, in this chart you can see, imagine now you want to buy a call for today or for tomorrow, for today, and you think your idea is that the Bitcoin is going to rise. You say, okay, I want to buy a call option, buy, call, and here's the expiration, 30. Pop. Here you have the price, 30,000. Here, this one. Why I don't have the chart here? So here you can put the limit price, amount. Yes, you have to put the amount. One of the most important you can buy 1 Bitcoin, okay, and you have the possibility to buy a portion of the Bitcoin. Let me say you want to buy 1 Bitcoin, okay. Here you have, it will cost you $11, okay, and here you have the chart what we were talking about, okay. And I'm going to make it a little bit bigger so you can see it better. But here the chart shows you that your max loss, it's $10. Remember, we were talking about buying a call option. So you are going to make money, unlimited amount of money, if the market goes up, okay? And you are going to lose just what you pay for this contract, okay? The premium paid. In option, it's called premium paid. So this option cost us $10. You have it up here, okay? Cost us $10. It's an option, okay? A buy, a call option, 26th of July, Bitcoin, 30,000, okay? It costs you $10. And if the market goes up, you can see if the market goes to 35,000 in Bitcoin, you are going to make with $10 invested, you are going to make 5,000. You know you understand the no linearity of the options. In my opinion, in these charts you are able to see it. Okay, why? Because if something happens and the market goes to 45,000, okay, investing 10, you can make 40,000. Okay. Of course, it's an option for tomorrow. We need a very special movement, a very big movement in this market. But this is how you have to think about the non-linearity. And you can see that this chart, okay, shows you more and more and more on one side. Why? Because you buy a call and you are limited. When you buy a future, it's totally different, the payout diagram. Of course, if you think that the market is go down, you can buy a put Okay, go back. You can buy a put. Imagine that you think that the Bitcoin will fall. You can buy this put. Okay, it costs you $6. You have it here. Okay, and this is the payout diagram of a of a long put, which benefits if the market falls. When you sell a future, what you told it, a call is like when you buy a future, but the payout is not linear, and the put is quite like when you sell a futures, but the payout is not linear, and you have a stop loss. Because what is your stop loss at the end? The amount you pay for this contract. In this case, is $6. Imagine the possibilities you have. And of course, you have the possibility to buy fractions of that contract. Okay. This is the basic. Yes, this is 80,000. So here, buy put Bitcoin 26th of July. Remember what we were talking about before. Okay, this is a type of the contract. Buy the put contract. Bitcoin 26th of July, 29,000, and it's a put. Okay. This number shows you the correlation between the price you pay and the price of the Bitcoin. Okay. It's just a number. It's not the leverage. Okay. But as you can see that if the market falls, you are able to make huge amount of money. Depends on your bet. Of course, this is the basic platform. We are going to add more and more things, like several combination to be able to make combination between contracts, and you have the possibility to trade like a pro with the pro version, where we are adding more and more things. Okay. Of course, you have an academy link. I don't know. Here you are able to learn the basic things. Okay, what is an option, K option element, everything about related, which is the basic things. Why? Because for the next webinar, if you take a look to these very short videos, okay, you will be understanding easier what am I talking about. Okay, why? Because option trading needs a little bit of effort for your side. Why? Because of the non-linearity. You can't get everything for the market. Okay, so if you want to make good bets with good opportunities to make a lot of money, you can do it with options, but you have to learn a bit. You have to dedicate a little bit of your time to understand how this moves and why it moves like this. In these basic videos, you can find information. And of course, this is not the presentation. And of course, in our channels, you will be able to ask us questions and to ask about the market and about more and more things. We are going to learn about this very, very, very interesting combination and market speculation. I think for today it's enough. It's more than 1 hour. I don't want you to have a lot of information. Just keep in mind the possibilities you have, and remember 2 basic things. Don't buy options when the volatility or that indicator is high, because I'm sure you are not going to make money. And don't sell options, naked options, because you are going to one day you are going to lose everything you made. Okay, so I like starting a journey with very basic things, but showing you what not to do it's better than telling you that you have to buy calls and you have to do that and you have to. No, think on these two things and look to the basic videos on the school. And next time we are going to talk more about strategies and basic ideas, basic setups. We are going to see more things about the platform. And now let's see the questions, okay? Thank you, nice class. Okay, let's see from the beginning, okay? Always good. Rene, you are here. So let's highlight the questions. I cannot highlight the questions, okay? It's really gonna be the next big thing. Look, I'm going to tell you that Andy, no, look, it's yes, okay. Look, it's asking. It's really gonna be the next big thing. Look at the option markets in the XPX. Look at the hedge funds and the banks playing the 0DT options. Okay, Bank of America, Goldman Sachs, JP Morgan, everybody is in that business. Okay, imagine that the crypto market in the last few months had regulation problems. What we are going to do, but these problems it's looking that they are coming down. Okay, today I read news that United States will have the first Bitcoin fund. So Bitcoin is here, the crypto market is here, and after a little bit of shake, when you shake the market, everything which is not good is going to die. And now we have a few cryptos which are going to be here until the end. And if you have a market and we start to have options on the market, and if the market is more or less stable, it will be the next big thing. Why? Because everybody wants to trade option. Every professional trader, everybody who wants to have an edge in trading is using options. Everybody. So this is why it's going to be the next big thing. I'm trying to read now the questions. Okay, what is the main difference, Marcello? What is the main difference between option and future perpetuals? So I think I answer you this question. In futures, you payout diagram. It's so it's like. So in future, your pay diagram is like this. Okay, this is the future. You have unlimited profits and you have unlimited loss. When you are trading option, you can have unlimited profit with capped loss. And this is the most important thing between the options and the futures. The possibility to sleep well, the possibility to don't think if the market is going to hit your stop loss and the market goes away. The possibility to be to make different strategies and to let them ride. No, I buy that call and my opinion is the market goes up and I let the position ride. If you are in an option, if you are with the future, you never know when a bad news comes and everything can change. So in my opinion, this is the biggest difference. It's basically capping your loss. And what happens if you have a future, okay? You put a stop and your stop is not executed because market volatility, because the market maker, because blah, 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 all the bullshit that people are telling to you. Your stop is not executed. You can lose all your account. But if you are With an option, with a call option, the maximum you can use is the money you pay for that option. Okay, Marcelo, Maclero TV. Option can take market swings without liquidation risk, unlike futures. Yes. What you mean with about liquidation risk? GZ, they ask me, I don't understand. So option can take market swing without liquidation risk, unlike futures. I don't get all the question.
Maybe I think hi Greg. I think the comment there is just that if you bought the future and it drops a very large amount, right, but then goes back up, you obviously might get liquidated. But if you buy an option and the price goes down a lot, you don't lose the option. So if it does eventually go back up and it hasn't yet expired, then you can still profit. So you don't have the risk of liquidation.
Yep. Yeah, because if the market goes down, you already pay the money for that right. So you don't lose that right, okay? If you have a future and you lose a lot of money, the risk team close your position, and when the market goes back, you are not in the market. This is one of the most interesting thing about the options, that you can make portfolios, you can make strategies, and you can be there in the market, and this is very important. Why? Because if you are stopped out, you died. In options, you can leave the options and say, okay, now I let the market to do what he wants. And if it's go up and you had a call, you make money. Let's see more questions. Interesting example. Any first time? My first time being interested in options. Andy, it's a very, very, very long way, and you will enjoy this journey because we are now at the very, very basics. Want to know how to make money with options. This is why you are here. Good information for the house. Good example. Yes, here. Yes, Macro TV. Yes, this is. Put is like short for future and call like long. Yes, Marcello, we can say that it's yes, it's quite the same. But don't forget the linearity, okay? And because of the option, this indicator, the option volatility, the price is not 1-to-1. This is the difference. But you know, at the very beginning, the maximum number, the maximum amount you can lose. That sounds right. Future and option, which one has higher risk? Timmy, as I told you, in my opinion, future has more risk than options, but it's very important to say that long options or both options, okay? Because if we are talking about short options, okay, also called naked options, the payout diagram is totally different, okay? Because this is the payout diagram of a short option. So compare it to a future, you have limited unlimited loss, and you just can make the money you get from that call. So I would say that the future, between future and options, both options are less risky than futures, but if you are talking about short options, they are more risky than futures. And the next question, which one could make bigger profit? Of course, options. Why? Because they are not linear. With future, if the price goes up 100%, you make 100%. But if with options, if the price goes up 100%, you can make even 1000% because it's not linear. Is there any trader that I can follow? Timmy, follow yourself. Follow yourself. Know about the market, and don't believe everything you can see in internet. Okay, so it's very important to know a little bit about the options, to have a clear plan, and to have a clear strategy. You don't need to follow people. Why? Because if you make a trade, you know how to handle it, and you have to keep your trading plan. And this is the way how you can make money. This is safer to trade options than futures. Maclero TV, yes. In my opinion, yes. But option has also higher leverage, right? Yes, of course. Option has higher leverage. And this is why when you buy a call option, you have more possibility to make bigger money than when you buy a future. Because the leverage and the non-linearity, it's what gives you this possibility. How far in the future can an option be? Let me check. We have here until June 2000, until June next year. Okay, you have it here. Of course, the options for the next year are very expensive. Why? Because you have to pay the time. But this will be the next lesson when we are going to talk about the time and the price relation between the options. It's quite a difficult thing to explain in the first lesson. Okay. Looks very professional. Thank you. So if I buy a call option, the max loss is my original position. Yes. This. Okay. If you buy a call option, okay, the max loss, it's the amount you pay. But if you come here to the platform, okay, imagine that you want to buy a call option for tomorrow, okay, at 29,500, okay, and you want to buy here 1 Bitcoin, okay, it's cost you 49, okay, and here in the chart you can see that your max loss it's $49. This is your original position. This is the maximum you can lose in this trade because it's what you pay for it. Okay. Can I? Now, Timmy Wang, can I close the position in a run? Yes, you can close the position whenever you want. Okay. Normally, it's better to buy option. I would say that the best is to make a combination between bought and sold options. Okay, it's more complex for the next time. Okay, okay. Can I close the option in advantage of try reach the target price earlier? Yes, of course. For example, a buy of 13, but the price reaches. Yes, of course you can. So you can close the option you bought between the day you bought it and the expiration date whenever you want, and you can sell it, you can rebuy it, you can sell it again, you can do whatever you want until the last day of these options. And you, of course, you can close the option in advantage with profit. Yes. The dates, yes, one. Here, okay, the exercise date is 30 of December, but the price reaches the target price on 30 of November. Can I sell it in a Yes, of course, you can sell it whenever you want. Be careful. The price, the strike price, okay, in this case, 29,500, it's the price of your contract. If you are below this price, okay, you are not going to make money. You are going to make money just if you are above this price. If you look at this chart, okay, here, because it's the basic lesson, I don't want to explain everything in the same day. So this is your strike price, okay, it's 30,000, okay. This is where you have the right of the contract. You pay this amount for that contract. You are going to make money when the market goes up and you are above your strike price plus what you pay for the contract. This is why our break-even point, it's a little bit above the strike price. Okay? This is the strike price, and this is the strike price plus the money you pay for the contract. And everything which is above the strike price plus the premium paid, it's your profit, and it's unlimited. And of course, if the Bitcoins goes up before the end, the expiration day, the last day of your contract, you can close it with all the profits you have. We are going to the next lessons, or if you look to the internet, okay, we are going to talk more about these payout, profit and loss diagrams to understand them better. Okay, but this is the first day. More questions? Carl, I would like to ask, most people in the market are optimistic that Bitcoin will fall recently. What do you think of the future market? I don't see the future. I don't have the I don't have the possibility to see the future. In the options, one of the most important things we have to understand is the option flow and how the people invest. Okay, I'm going to show you some data and how to learn the market and how to read the market and how to see what the people is doing. Because I don't know the future, I cannot talk about the future. In my opinion, we need a little bit more time to pass because there are some countries who really want to make regulation about the Bitcoin, and when this is done and when ETFs and more products will come out to the market, in my opinion, Bitcoin should rise, but I don't know. So I'm looking to the market every day, and I'm taking decisions based on the market positions every day. I can't tell you now in 1 month what is going to happen. Holy, nice class. Thank you. Amazing first lecture. Thank you. Beautiful lecture. Thank you. Okay, Carl. Actually, I would like to ask, what is the difference between a put option and a delivery contract? What you mean with a delivery contract? A delivery contract, it's the underlying. Ben?
I think he might be referring to a future, which is which is a guaranteed delivery, right?
I don't understand the question.
Yeah, it's a little confusing, but my only understanding of it could be that by delivery contract, he's referring to a futures contract.
Yes, but the delivery, it's when you get the future contract. But now, in this case, we are talking about liquidation for differences.
Yes, but if you buy a future, you're basically buying that contract of delivery, right, of the underlying.
Yeah.
So maybe he's referring to a futures contract, but that's my best guess.
Yep. Carl, if you want, you have here the emails. You can send that as an email explaining a little bit more your question. And I think it's more than one and a half hour finally, but we answer all the questions. Of course, if you have more questions, please don't hesitate to send us an email. Here you have the links of Twitter, YouTube, School, and Telegram. And see you in next questions. I think it's okay. See you in the next lesson. Thank you for your time. Bye-bye.
Thanks so much, Greg. Thanks so much. Today it's been a really great presentation, very informative, and it's an incredible first step on this journey of learning about options with Greg. We hope that the insights shared by Greg have inspired all of you guys to take your options trading knowledge to the next level. So before we part ways, we just wanted to remind you that this is the beginning of our Masterclass live series, and we're committed to continuously delivering valuable content and fostering a community of empowered traders like yourselves. So your feedback is crucial to us, and we encourage you guys to share your thoughts, any ideas, topics you'd like us to cover in future sessions. And together we can shape this series to better serve your needs and interests. Once again, thanks again for joining us. We look forward to seeing you in our future events, where we're going to continue exploring the exciting world of options trading and support each other in achieving financial success and personal growth. Thanks again to Greg. I hope you all enjoyed it. It's been great to be here. Thanks, everyone.
Thank you. Bye-bye.